I have an expo. Welcome back again to my channel. Yeah guys, it's been a while. Yeah, I know I'm back again and I'm bringing you another topic on trading. If you like the video, help your boy, subscribe to my channel and also share the video. Alright, so today I'll be talking about candlesticks. As a forex trader, you would have heard about candlesticks several times. Okay, so it's nothing new actually, but there's something I want to draw your attention to, that no matter any kind of thing that you're using to trade, you understand, applying this on your entries can actually give you confidence. All right, no fear at all. All right, so let's get into it. I'll be talking about cross doji. Talking more about the cross doji, as you can see on this picture, it has a small body, almost very close to the upper wick, whereas it has a lower, longer wick. So whenever you want to spot a cross doji, it must always possess a longer wick below the body and then a little wick above the body. We can also see this as a cross doji, also this as a cross doji, also this one too also is a cross doji. Do you understand? So when you know this, you can actually spot them anywhere in the market. And secondly, standard doji, whereas standard doji has the little body just in the middle, in between the upper wick and the lower wick. It actually means indecision in the market. Yeah, a situation whereby the sellers and the buyers are just being indecisive, like the current price of the market is being stagnant, where people are kind of satisfied with the price level and no one is ready to push it up or to push it down, so it's just on a state of rest. All right, that's when this kind of candlesticks are being formed. Here also is another standard doji. Standard doji meaning it has a little body in the middle, whereas the wick above and the wick below are the same. A lot of you guys will be asking, what is it talking about, cross doji and standard doji? I know you must have heard this over and over again, but you don't really know the functions. They are very, very powerful for your trade entry. You need to pay attention to areas like the support areas, the resistance areas. Let's take for instance, I'm having here as my support level and I'm having here as my resistance level. All right, and price started moving from Mr. A, which is my resistance level, down to Mr. B, being the support level, and it got here and paused. So it gave us a candlestick like this. This is a standard doji. Immediately the market landed on a support level. Whenever you see this kind of chart pattern, standard doji, all you have to do, whenever you see it on a strong level, all you have to do is what? Wait for the formation of next candlestick. Another candlestick formed just right after this one has formed, and then you see another candlestick form like this. Okay, I can assure you that the trade is gonna turn bullish. Okay, it has given you a signal for a bullish move. Guys, for you to trade this thing profitably, all you have to do is make sure you find these candlesticks on higher time frame, like the weekly, the daily, the 4 hours. For you to trade this profitably, always use a higher time frame for it. If this candlestick was formed on a daily on a resistance level, so it has already given me an impression that something is going to be happening here. So by the time the next day candlestick closed, it actually formed like this. You will be fully assured that this market has made all the bullish confirmations. I hope you get that now. All right. So same happens on the resistance levels when price actually form this kind of candlesticks like it did on a support level. Price coming from Mr. A to Mr. B, and at the end of it formed this candlestick, standard doji, and after you waited for the next candlestick formation, it forms something like this again. All right, so all you have to do is take your trade immediately. It's actually giving you a bearish confirmation. So I'll be giving you examples on each of them to understand deeper what I'm talking about. So guys, let's take a look at these examples I have here on me of those candlesticks. These candlesticks on support and on resistance. So if we look closely here, around here, we can see this is a standard doji, right? This is a standard doji, and like I told you earlier, on a standard doji, all you have to do is wait for another candlestick to form. Can you see after the standard doji formed, another candlestick formed, giving it a bullish bias? You understand? Confirming these candlesticks a bullish bias. Only one standard doji isn't enough for it to be fully a confirmed bullish bias. But after this formed, another one came up here with a bullish color. So the next candle, had it been the next candle came with a bearish color, I will not do anything. I will wait for another set of candlestick to print before I will know my next decision. All right, especially on a support. If I find this on a resistance and the next candlestick is supposed to be a bearish one and it formed with a bullish color, I'm not going to do anything. I will just wait and allow the next candlestick to form before I make my decision. Okay guys, so this is it for it. Now that is it on the support. Now going back on the resistance, you can see same thing actually happened around here where we have the candlestick here, standard doji. This is a zone area where market broke out and came back again to make a pullback on it. All right, so you can see when this thing happened, you see how the market flew down here. You see the drop, bro? Can you see the drop? Can you see the drop? How massively it sold out? And same here when it happened. Can you see how massively this candlestick bought? Can you see this? This is a daily candlestick. Daily candlestick. So if you had gotten an opportunity around here, you will have bagged a whole lot of pips. Okay, guys. Now I'm going to show you an example on cross doji. So guys, here is an example of cross doji. You can see what happened here. This is a zone where market broke out. This is a live example on a daily time frame where market made a zone here and then it came back again to what? To retest it. And what happened? You can see this long cross doji. Then after this thing formed, another candlestick formed alongside. After this thing formed, another candlestick formed, giving it a full confirmation for the direction. Then afterwards, you can see, can you see that? You see how massively it bought. Can you see how massively it bought afterwards? So no matter the kind of strategy you are using, you can still use this as your trade entries and more confirmations. Okay, so that is it. Look at another example. I have another example here. So guys, you can see this. This is a cross doji where market actually made this a zone here. There's a zone around this place. So that's why the market came back to come and retest it before continuing to go down. You can call it supply zone or other blocks, whatever. Okay. Yes, so but you can see this cross doji here. You see this cross doji, and afterwards another candlestick formation gave it a full bearish move. Can you see how massively it sold out? Okay, guys, only this strategy alone can be able to make you a whole ton of money, can be able to make you a whole ton of money. Okay, guys, whatever area you find this candlestick patterns, you have to pay a good attention to it, and you can take a whole lot of advantage of the formation of those candlesticks. This is the end of the class, and I hope you really learned something from this. Make sure you practice, and that's the only way you can become so perfect on it. You can see I don't have indicators here and there, this and that, just only on this, on my naked candlestick chart, and I'm seeing everything verbally. All right, thank you all. If you like the video, help your boy, subscribe to my channel,